frankly, if you look at the action in gold and silver, they look squeezy. And they look like the beginnings of a short squeeze. Now, obviously, you can look at lease rates on silver. You can look at lease rates on SLV, the borrow rates. They're all getting more expensive. And frankly, it looks like the end game is going to be a failure to deliver. So there seems to be blood in the water as gold broke through the 3,500 level and silver broke over the 3940 level. The action to me looks squeezy.
In today's news recap, spot silver gains holds not far from 14-year high. Spot silver traded within striking distance of a 14-year peak of $42.9 on Friday following a measured interest rate cut by the Federal Reserve and as the central bank signaled a gradual easing path by year end. The Fed lowered its federal funds rate target range by 25 basis points to 4 to 4.25 at its September meeting and indicated another 50 basis points of rate cuts by the end of the year. Fed Chair Jerome Powell described the September policy action as a risk management cut addressing the weakening labor market. Powell also noted the central bank was in a meeting-by-meeting situation in regard to the rate outlook. Markets are now pricing in about a 92% chance of another 25 basis point Fed rate cut in October. Lower interest rates tend to reduce the opportunity cost of holding silver, which pays no interest. Additionally, robust industrial demand continued to support silver prices amid supply constraints. Silver is facing its fifth successive year of a structural market deficit, according to the Silver Institute Industry Association. Spot silver was last up 0.79% on the day to trade at $42.15 per troy ounce. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
Also adding silver and stockpiling silver. So there is physical demand from all over the world. The BRICS, obviously, the BRICS nations are, they're stockpiling gold. And now it looks like they're stockpiling silver. The world understands that the dollar's days, the good days are behind it, and it's ultimately going to collapse. So you've got central banks all over the world trying to unload gold onto their balance sheet, because gold, the best way to describe gold, it's the anti-dollar. So as the dollar collapses, gold goes higher and it makes up for losses that they'll be taking on their balance sheet. On the dollar side, they'll gain on the gold side. One other thing, if you look at the world and come to the conclusion that basically the world is at war, and part of war is financial war. If you think about it, what's the easiest way for the East to blow up the West? Would be to blow up the financial system. And the way to do that, the Achilles heel is gold. And the fuse to that Achilles heel is silver. Well, first off, the country's divided in so many different ways. It's divided between left, right, conservative, liberal, and there's so many other different ways. By race, by religion, you name it, the country's split. And you're going to be disappointed in this answer, but nobody's going to step up. If you're feeling like you're falling behind or whatever, nobody's going to step up from the government or anywhere else to save you. This illustrates exactly what you, myself, and a lot of other bloggers have talked about over time, is that you need to become as self-sufficient as you possibly can. You need to protect yourself, your family, because no one else is going to do it. Now, internationally, that's pretty simple also. What are tariffs? Tariffs are, if you want to call them, they're fighting words. Every time we put a sanction on Russia, what is that? Is it a greeting card or is it a financial act of war? So it's, from an international standpoint, it is the world. The world is fighting over trade, if you will. Because trade got so imbalanced where the United States, our biggest export was dollars, and we imported real things. And the world got to the point where they got tired of exporting real stuff and accepting dollars. And they're looking for a way out from under the dollar hegemony. Unfortunately, it is East versus West, but they're acting logically and doing they're making logical decisions, logical acts, and the most logical of all, if they want to get out of dollars, is to stockpile gold. And you're seeing that, you've seen that in the price of gold. You've seen that in the price of gold since October of 2023, when, was it 2023 or 2022? I can't remember. But if you look at the gold chart, you'll see it virtually to the day after the Russian reserves were confiscated, gold started going higher because the rest of the world looked at that and they said, hey, if the United States can steal Russian gold, can steal Russian assets and get away with it, what could they do to us? They could destroy us. So, the logical move is to offload dollars / treasuries and unload gold, because gold has no borders. Gold is borderless. Gold is accepted everywhere in the world.
In today's Precious Metals News Recap, UBS says silver poised for all-time high as investors flock to precious metals. Silver prices have surged to $42 an ounce, a 14-year high, on the back of record gold prices and a wave of investment inflows. Following the rally, UBS has raised its forecasts for the metal, saying it could reach all-time highs in the coming year. The bank now forecasts silver to trade at $44 an ounce by the end of 2025 and climb to $47 by mid-2026, aligning its outlook with a recent upgrade to gold. We flag that silver prices could reach an all-time high, a view that supports a long position in the metal or selling its downside risk for yield enhancement, strategists Dominic Schneider and Wayne Gordon said in a note. The rally comes despite sluggish global industrial activity, with investors drawn to silver by the same macro forces propelling gold. UBS pointed to geopolitical tensions, U.S. fiscal deficits, slower growth, and the prospect of Federal Reserve rate cuts as drivers of demand. Silver's strong correlation with gold, typically between 0.5 and 1, has amplified these effects. Exchange-traded fund inflows underline this trend. UBS highlights that silver-backed ETFs have added more than 20 million ounces this quarter alone, bringing this year's total close to 80 million ounces. While significant, holdings remain more than 200 million ounces below their pandemic-era peak in 2021. Looking ahead, strategists see silver benefiting further as monetary conditions ease and investors look ahead to a cyclical recovery. The team expects the gold-silver ratio to decline toward 80, supporting relative outperformance for silver. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
If your biggest asset is the biggest liability of a generation that can't think for themselves. How strong is that? How strong is that asset? The asset is nothing, because it's so obvious, and if you can't see it, in my mind, it's not somebody I can help. I generally try to, if I meet somebody, and let's say I think right off the bat they've got cognitive dissonance, my first question is the U.S. government broke? And 95% of the people out there will say, yes, of course the government's broke. But it doesn't matter. It does matter, or it will matter. It doesn't matter until it matters. But when it matters, everything paper is gone, because everything paper is held up by a foundation of U.S. treasuries, which are issued by a bankrupt entity.
What about that notion of the non-U.S. centric nations pivoting away from the need for treasuries for this overnight repo? They need liquidity, but they've found a way to work around that and to use actually promissory notes for gold as collateral rather than the U.S. treasuries. Do you foresee that adding to the dumpster fire of a falling international demand for the U.S. treasury? And how does that play out step by step in your view?
Yeah, it adds to it just from the aspect of those entities are no longer buyers and they've become net sellers. So that creates more supply, more treasury supply, more bond supply, which means lower prices, and it means higher yields. I think we would be remiss if we didn't talk about the Genius Act and the stable coins. I mean, the whole premise behind that, and they've already sniffed it out. I just posted an article today on my website from, I think it was the Asian Times. They've already sniffed that out, that the stable coins will be used as a source of demand for treasuries. And then what happens 2 years from now, 5 years from now, whatever, when the U.S. decides to break the peg between stablecoin and the dollar, and they collapse the dollar? I mean, the East has already sniffed out that this is a fake way. It's a way to get something for nothing, and that something is paying off the debt of the U.S. with nothing.
What do you think of Holter's take? Do you agree with him? Is $50 silver by the end of the year a realistic target? Post in the comments section down below your honest opinion, and share this video with a stacker. Now subscribe to the channel and check this video right here because you'll love it. I'll see you on the other side.